Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing well after the long weekend. So in today's markets here, guys, stocks ending pretty much red across the board. So they had a big gap down open this morning. There was some overnight fears in the overnight futures session coming in from both Europe and China. On the European side, there is currently a meeting ongoing in Davos, Switzerland between heads of state and European central bankers. And the gist of things is that Europe is very bearish on being able to decrease rates this year as they continue to be plagued with inflation over there. So there's discussion whether or not these fears will pour into the US markets as well and prevent the Fed from decreasing rates in March. We also have comments from Fed Waller today that reiterates that the Fed is doing a great job against inflation in the US markets here, but the rate cuts are still uncertain for March. So the story of the day here, guys, the reason for most of the drop is we had a very large uptick in yields and the US dollar today. So in today's video, guys, we are going to recap the economic events that occurred over the last couple of days. We're going to go over our major indexes, of course, on our major tech names as well. We do also have two earnings that I want to look into. That is the continuation of the banking earnings in the names of Morgan Stanley and Goldman Sachs, which are two of your largest investment banks, not so much retail consumer facing banks, but do provide good insight into how the investment world is playing out for those investment banks, whether or not they see good growth in their wealth management divisions, which could lead to some indications whether or not investors remain confident about the markets. So without further ado, guys, let's get right into today's video. SPY down 0.37%, QQQ down pretty much flat here, but the story of the day was the drop in financials after a few banking earnings, healthcare pulling back as well, and even the Dow Jones here, your value names pulling back as well. So pretty much red across the board. If you take a look at the heat map here, guys, it does not look pretty for the day, just to say the least, right? You had a couple of outliers in your semiconductors, but for the most part, broad market sell-off here, guys. So definitely not a very good day in the markets. Most of your assets pulling back. On the one-day relative performance, you can see that very clear as day here. Everything pulling back except for a slight little gain here in technology, but really nothing to scream home about, truly. On the 1 week relative performance, you can see as well that only technology, basically big tech, is the one holding up the markets. And that was the case over the past week and does continue into this Tuesday session. So what exactly has been happening over the past 2 days, guys? Over the weekend, we had some negative news, once again, coming from the Red Sea as companies continue to defer their shipping containers and their shipping routes. Instead of going through the Red Sea all the way to Europe from Asia, they're having to go around the coast of Africa, which does add between 10 and 14 days of extra shipping time. So causes of worry for inflation. Will this add to inflation? Well, there's two trains of thought, right? Obviously, one, it's going to cost producers more to deliver the products to European markets and then potentially having a cascading effect into Europe. But the question remains, will companies have to pass on these price increases to the consumers, or will they eat it in their margins? So that is going to be the big question of the hour. And it's going to be curious to see over the next couple of weeks as we get the rest of our company earnings here, what they are saying about those geopolitical conflicts, whether they're going to pass price increases on to the consumer, which would be bad for inflation, or whether they're going to take it in their margin, which is obviously going to hurt their EPS and profitability for this current quarter. So what happened in terms of your interest rates, right? Let's go over the rates. What happened today on interest rates, right? You can see the 20-year yield here up on this day, pretty much about 2.41%. So your daily uptrend is now starting on the 20-year yields. But as a matter of fact, guys, this is just looking for a weekly higher low in relation to our previous high for further downtrend continuation over the course of the year, as rates will potentially be brought down over the course of the year. I do think that the rate peak was back in October, and I do think we will follow a steady downtrend. The 10-year yield as well has been upticking as well today. You can see this on the day, 2.7%, one of its largest days in the past couple of months here, trying to set the daily uptrend as well. But just a quick reminder too, just looking for a weekly lower high for further downtrend continuation after this large engulfing move over the course of the months of November and December. So slight little temporary uptick in yields here, but I do think that once again, the peaks have been previously set in October, and I do think we will be trending down over the medium to long term on yields, but obviously these recent upticks in yields do have a negative impact on yield sensitive stocks in the short term continuously, right here, guys. So here's the headline. Wall Street ends lower, dollar US yields rise on shifting rate outlook. This was a twofold part, one coming in from Europe and then a few Fed member comments today. So let's take a look at this. US stocks retreated on Tuesday while the dollar gathered strength amid warnings that markets might have gotten slightly ahead of themselves with respect to the timing and extent of central bank policy cuts. There seems to be vacillation in terms of whether or not the Fed are going to cut rates in March, and today seems to be one of those days where investors have decided that maybe they're not going to cut rates in March, said the CEO here at Horizon Investment Services. Couple that with higher interest rates, and you get a sell-off like this, which seems to be a sell everything day as we currently saw in the markets, right? So here's the thing, right? So we did have comments from U.S. Federal Reserve Governor Christopher Waller here today when he came on CNBC and echoed the sentiments of his European counterparts, the meeting in Switzerland that happened yesterday and today, on Tuesday, saying that while U.S. inflation is approaching the central bank's 2% target, the Fed should not rush to lower interest rates until lower inflation can clearly be sustained. So a bit of a positive and negative comment from Governor Waller here, right? So he's saying that they're doing a great job in terms of trending towards 2%, but that they're not in a rush to lower until the inflation can be clearly sustained. So still a comment about being data dependent by the Fed here. And when he's talking about his European counterparts, this is exactly what happened here, guys. European shares also pulled back to waning optimism over rate cut expectations following comments by European central bank officials. So this is what happened yesterday and today in Davos, Switzerland, where ECB members, specifically one of your ECB members from Austria, were very, very hawkish on the stance of inflation in Europe. Inflation in Europe is unfortunately not going away as fast as it is in the US, and it's leading to a lot of policymakers in Europe to really put off the table any rate cuts for the foreseeable future. So those fears in Europe can potentially pour in to the US market. Obviously, we're in two completely different economic macro cycles right now between the US and Europe. US is actually recovering a lot faster, but these negative headlines, guys, did not help yields on the day. And you can see this in the Fed's watch tool here for your 2024 March Fed meeting. Now the probabilities of a rate cut only stand at 64.2%. If you take a look, we were even saying this as of Friday's video. On Friday, they were standing at 76.9%. And now with just a 1 day change, we've already come down about 12% off of your Friday's read. So big catalyst here in yields for the day in terms of that pricing in of the rate cut in March. So those are a few of your economic headlines which did plague the markets today here, which led to the markets coming down, recovering slightly intraday here, but definitely not a good day overall. So before we get into the technical analysis and see how we're heading up on the technical side, let's take a look at a few earnings, and we're going to go over these very quickly. So first off, we have Morgan Stanley. So Morgan Stanley reporting earnings before the bell here today. They were featured in my yesterday's videos in terms of the top 10 plays that I was watching, and Morgan Stanley came right down into our area that we were looking to sell puts on. So Morgan Stanley, miss on EPS. Once again, guys, similar to last Friday's earnings, this is largely due to one-time events. If they didn't have to put away money for the FDIC back in March, pretty much when we had the regional banking crisis, they would have actually beat on EPS for the quarter, but their end of year one-line items that they had to disperse actually brought EPS considerably down. So a bit of a mixed read here. Don't take these numbers at face value. They actually had decent EPS if it wasn't for that one-time line item. And they did beat on revenue here as well. So Morgan Stanley faring up pretty well here, coming down into our large area of support. This green box here is going to be good temporary support for the stock right here. And once again, we are just looking after a big weekly engulfing move like this for a weekly higher low for potential trend continuation here. No real red flags in the company earnings. This is why I do think that this area does represent a decent buying opportunity, or rather an opportunity for selling puts in the short term here and gaining some premium. So in terms of the stock here, Morgan Stanley revenue tops estimates, but CEO warns of geopolitical and economic risks. So that's what we were talking about in the early part of the video here today. Right. So on Tuesday reported fourth quarter revenue that surpassed expectations, boosted by the strength in investment banking. So Morgan Stanley said its revenue from investment banking rose 5% from a year ago on the back of a 25% increase in fixed income in underwriting revenue amid higher investment grade issuances. So very decent here. Net income came to 1.52 billion or 85 cents per share, down more than 30% from 2.24 billion a year ago. So about, they paid about $500 million in disbursements here. And you can see right down, the bank's results were hit by two one-time regulatory charges. $286 million related to the FDIC in special assessment, which was due to the banking crisis in March, where the Fed asked them to put a bit of money aside to save the general banking sector, and a $250 million legal charge to settle a criminal investigation and related Securities Exchange Commission probe of the unauthorized disclosure of block trades. So the bank was kind of caught in a scandal earlier this year where they were providing better prices to institutional traders here than should have been the case. So this is the first earnings report under new CEO Ted Pick, who succeeded James Goldman as CEO at the start of 2024. He's a veteran who rose to the ranks, lead the bank's Wall Street operations. And all in all here, guys, right? This new CEO here, right? However, warned of two major downside risks that could weigh on his bank in 2024. The first is intensifying geopolitical conflicts, right? The state of the conflict in Israel, between Israel and Gaza, and obviously the new Red Sea developments. And the second is the state of the U.S. economy. The base case is benign, namely that of a soft landing. So still the base case for a lot of these major banks is the soft landing. But if the economy weakens dramatically in the quarters to come and the Fed has to move rapidly to avoid a hard landing, that would likely result in lower asset prices and activity levels. So still reiterating the fact that if we don't get the soft landing here, guys, right? Obviously, asset prices could potentially trend lower. But to reiterate, the base case is still a soft landing for most of these executives. He also said inflation could continue to challenge the consumer and the supply chain, which could result in a stickier Fed and higher interest rates for longer. So this all has to do with pretty much your recent developments in terms of the Red Sea. So all in all, a decent quarter for Morgan Stanley if it wasn't for those one-time line items. No real red flags in the company in terms of their financial status here. They are still growing. And as you can see here, guys, if we pull it up, their expected revenue, oops, that's the wrong tab here. Their expected EPS growth and revenue growth is fairly good for 2024 through 2026. Big recapture here in EPS and ever expanding revenue for the next foreseeable future as well. So they really didn't have any bad guidance whatsoever, just kind of staying a bit cautious as a whole. And as our second earnings here, we're going to cover Goldman Sachs. So Goldman Sachs here currently actually had a very good quarter here, guys. So taking a look at the earnings here, you can see massive beat on EPS here, guys. 51% in beat in EPS, which led the stock to rise here pretty much almost 1% on the day. Not that much, but still not a bad day for Goldman Sachs nonetheless. And revenue increased by about 5% here. So on the technicals here, guys, technicals are looking very juicy, right? So after this big engulfing move, we're looking for a weekly higher low, weekly bull flag in motion right now, potentially currently sitting on our previous area of resistance, which is now going to be newfound support right here, all the way down to your 12 EMA, which is going to be the next area of previous resistance is support. So this whole channel here between about 375 and roughly their 360 level is a very decent area of support for this stock. I do believe that they'll continue to move higher here. Very good guidance for Goldman Sachs. Their investment banking division has been performing very well. A little bit too rich for me, guys. If you know me well on the channel here, my favorite play in financials currently is Charles Schwab. They do have earnings tomorrow before they open, so we'll see how they do. But let's focus on Goldman Sachs and end this earnings call right here. So Goldman Sachs blows away earnings expectations. Very good results by them, right? So the company announced Tuesday that profit had increased by about 51% from a year ago to just over $2 billion. Very, very good. But the majority of Goldman's gains didn't come from investment banking and trading, which are typically the New York-based bank's strongest division. Revenue from investment banking actually fell 12% from a year ago. Trading revenue fell 2.5%. So here's where they made most of their money. They said it was focused on simplifying its strategy this year and investing and growing in its asset and wealth management division here. So managing clients' money, which is closely linked to stock market performance. So in terms of their investment banking and trading revenue, their internal metrics here for those two divisions down, but they are making a substantial amount of money from their clients in terms of wealth management. That's where it all came from. This appeared to be a winning strategy with revenue growing within that division by 23% from a year ago. So very, very, very good in terms of performance by their asset and wealth division, right? So much like its banking peers, Goldman was also assessed a one-time fee by the FDIC to help pay for the regional banking crisis last spring. Goldman paid $529 million to help clean up the mess that Silicon Valley Bank and Signature Bank left in the wake of their collapses. Right. So just to reiterate, guys, all the major banks have been plagued by this. JP Morgan paid almost $3 billion to the FDIC. Bank of America, that we touched upon last week, paid about $2.1 billion. Citigroup paid $1.7 billion. So all of these things eroding the bank's temporary EPS scores. So that is one of the main reasons here that you had a drop in EPS on all the other banks. But Goldman Sachs, contrary to your other banks, was able to post very positive EPS due to the restructuring of their business here and focusing more on your wealth management and asset management here, right? You can see it right here. The dissolving of its consumer arm has been costly. Prior to this report, Goldman posted 8 consecutive quarters of declines. So Goldman, now actually, it's not in this article, but Goldman actually on the call did say that they wanted to kill their partnerships here in terms of credit cards, right? So their credit cards that they do issue in terms of retail partnerships, namely with Apple, they do want to potentially start canceling these and really focus on their core business. So they're kind of pulling out of the retail segments, which has been a loss leader for them. It's been great for in terms of their brand exposure, but has been contributing negatively to profit margins. So they really want to get back to focusing on what they do best, and that's being pretty much an investment bank first and not delving into the retail side of things. So Goldman Sachs, very decent earnings here, very beautiful chart on the technicals here, a little bit too rich for me to be starting positions right now, right? But if we do pull down into the lower 360, 350 area, could be a very decent area for your breakout or retest of this range, maybe writing some puts right down here in the 360 to 350 range. But all in all, I don't play Goldman Sachs that often to begin with here, guys. I rather prefer banks like Charles Schwab or even Bank of America, which is currently sitting at a very, very decent level here in terms of percentage off their all-time high. And I do believe that it represents better discounted value here in terms of their valuation. So that's pretty much everything for your banking earnings today. Not much insight into retail here, but at least you know that your investment banks are pretty strong balance sheets here and are set up to weather any form of storm that could come during the course of 2024. Now, let's move into our technical analysis here, guys, right? So what are the markets doing here, right? So we had a big sell-off in the morning here, gap down open, but bulls are playing exceptionally well defense at these higher levels here, guys. You can see it best on the futures chart. Look at this beautiful consolidation at the top right here, right? So after losing the daily uptrend by cutting this low right here, the bulls put in an engulfing move. Now we're kind of daily bull flagging, right? Great defense of the 12 EMA. So if they can continue this bull flag right here, probabilities do favor a break to the upside. That's because the engulfing move has taken back 100% of the move here. We're just looking for a daily higher low for potential daily trend change to the bulls right here. And they're playing such good defense on your lower time frames as well. Let's pull up the SPY chart itself, right? Very nice tightening range here on the 4-hour, which is pretty much signs of a daily bull flag. Great defense of the 12 EMA, as we were previously saying. So we're just looking for a daily higher low, anything pretty much above your 466.50, looking for a daily higher low for potential trend continuation. Why? Because your higher time frame bulls are all in control, right? Weekly higher lows, now looking for weekly continuation. So in control of the weekly chart and obviously in control of your monthly chart too. So we are having a bullish lean in terms of this, but obviously SPY currently being plagued by a bit of negative macro headlines currently, especially that rise in yields. Now moving on to QQQ. QQQ pulling weight for the entire market here today, as a matter of fact here, guys, right? So QQQ, at a point in time over the course of the night here, guys, you can see over the course of the night, QQQ was really down about 8%, 0.8%, excuse me, while the European session started and while we had those negative headlines from the ECB during those Davos meetings, right? So as from there, they actually had a tremendous recovery, trying to reset the hourly uptrend to the upside. Bulls do control still here the short-term timeframes as well, right? 4-hour consolidation right here, defending the 12 EMA very beautifully, and that's just leading us to a potential daily bull flag. You see it here on the futures as well. Nice daily bull flag, sideways consolidation here, guys. So after losing the daily uptrend here, bulls with almost a 100% recovery here to the upside, which gives the probabilities for a daily higher low for further trend continuation here, or actually trend change back to the bulls. So that is indeed what's looking like it's shaping up. But if for whatever it's reason, guys, we continue this consolidation, still tons of space, anything above 395.50, just looking for a daily higher low to potentially reset this trend to the bulls here. So as of yet, guys, no real red flags on the technical basis. Bulls still in short-term control here of your weekly timeframes as well, and obviously in terms of the monthly as well. So no real red flags. The red flags do arise if we take back too much of this move and set up for more daily downtrends potentially, and then even set up for further weekly consolidation, which could lead us into monthly consolidation as well if ever you lose this weekly time frame. But as of now, let's not get ahead of each other, right? Still healthy consolidation by your market bulls. So we'll see if they can shake off most of these negative macro headlines here. We do have big QQQ earnings coming over the next 2 weeks, right? So next week you have Tesla and you have Netflix, and then the week after you have everybody else, right? Amazon, Apple, Google. So going to be starting off here the next 2 weeks with our tech earnings. Now, moving on to financials. Financials, one thing that should be notable to you guys after financials today here, guys, is the loss of the 12 EMA on the daily. Also, you have a loss of your daily uptrend here. So daily uptrend was well in motion. Your most recent higher low was right here at 37.40, right? We were looking for the daily higher low for potential trend continuation, but we lost it today. So bulls losing the daily uptrend. Now we do have potentially a favoring for the bears here. Will the bears be able to set a lower high and lower low into a daily downtrend, right? Kind of similar to the pullback that we got in the S&P 500 about 2 weeks ago at this point, in QQQs about 2 weeks ago. Well, XLF is having it now. So will we be able to rotate QQQ to the upside while financials take a little bit of a breather? That would be the best case scenario. So keep an eye between the relationship here, QQQ, XLF, and XLV over the next couple of weeks. That will be key to determining whether or not the SPY is going to continue with the upside, or whether or not we're going to have larger form pullback and consolidation through January. So financials losing a bit here, right? So the bulls absolutely need to recapture this in getting as close as possible to your most recent high, 38.04 up here, right? If you want to have the best chance at recapturing this bull trend to the upside. But if ever you set the lower high and lower low, very healthy weekly consolidation here, guys. After pretty much like 10, 11 weeks in a row, weekly consolidation is inevitable in these stocks, right? So looking for weekly consolidation at this point, anything between 37 and 36, just looking for a very healthy weekly higher low. Anything above 31.40, guys, just going to be weekly higher low for further trend continuation. Financials still looking very good, but on the short term, have to notice these catalysts, right? Loss of the 12 EMA, loss of the daily uptrend, first time this has happened in the past 2 months. So monitor the relationship between QQQ, XLF, and XLV. If every day that's red here potentially, guys, on the SPY, keep an eye. Why is it red? Is QQQ green while the rest of the market is dropping? That would still be healthy rotation. But if all of your major sectors sell off at the same time, you may be due for extended weekly consolidation, not only on XLF and XLV, but maybe QQQ as well, which will bring SPY into extended weekly consolidation as well. Moving on to XLV Healthcare. XLV Healthcare, still no red flag, still daily uptrend is being maintained by the bulls at this point, right? So very healthy daily uptrend maintained by the bulls, looking for a daily higher low, still anything above 138.67. This is the line in the sand level. The 12 EMA is right down there as well. So will healthcare bulls be able to set the daily higher low and continue the daily uptrend, or will it roll over like financials, lose this 12 EMA for the first time in pretty much 2 months, set a daily downtrend, and send us into weekly consolidation? If it is weekly consolidation, right, it will be very healthy. We're just looking for a weekly higher low, anything pretty much above 122.65, guys. So much space to set a weekly higher low. Target the top end of this range right here between these two little lines. 136.40 is going to be the short-term target here. And then if we pull back within the range right here, you do have big moving average support and big chop zone. I do think this will provide a very good area of support for the bulls. But as of now, they still have not lost the daily uptrend, right? So keep an eye on this, guys. What you want to see, if XLF and XLV consolidate after so much weekly move to the upside, we need to see big tech and QQQ start rallying, which will keep the SPY healthy. So keep an eye on that. Now moving on to IWM Russell. IWM Russell really continuing its slide right now. So Russell daily downtrend is confirmed at this point, right? Our first major index to confirm a daily downtrend. So daily downtrend is now to the bears. Keep an eye on your short-term timeframes here, right? The hourly uptrend was never been able to be captured by the bulls right here. You can see they made an attempt right here and now struggling, and now lost it again, right? Tried for the hourly uptrend right here, engulfing move by the bears. So your hourly downtrend just continues. 4 hour is the same, right? Unable to set 4 hour uptrend. So your daily consolidation just continues at this point. At this point, guys, we're going to be targeting 4 hour oversold levels for your temporary bounce level as this daily downtrend continues, right? So as soon as this move to the downside bottoms out, right, we're looking for this area of support, 187 all the way down to about 183 is your next area of support. As soon as it bottoms out, you're looking for the size of the bounce in relation to 196.09. If we get a very healthy bounce, the bulls have a shot of recapturing the daily uptrend. But if we get a very weak bounce into this area before we start rolling over on your lower timeframes again, expect daily downtrend to continue, which will just perpetuate our weekly consolidation. We're moving into the very healthy area of weekly consolidation now, guys, right? Just looking for a weekly higher low. Bulls still very healthy. The bears have not taken back too much of this move, only taken back roughly about 30% of the move. So bulls still very, very healthy, coming into my big area of consolidation here, right? 188 all the way down to about 182 is the area that I'm targeting for a potential bounce zone for the Russell. If we do come down to this area, guys, I will be looking to play options on the IWM and maybe even positioning with some TNA shares, which is your 3x levered for the Russell, which will be a long-term ad for me. And I'll be riding this until the index really starts recovering over the course of the next 6 to 12 months. Moving on to the Dow Jones here, guys. Dow Jones also showing signs of weakness. Also considering, guys, look, loss of the 12 EMA now, this yellow line, first time in the past 2 months. So Dow Jones also losing the series of higher highs and higher lows. Cut the lows here, 37,284. They cut them today here. So will the bears be in a capacity to set a daily downtrend? If the bears set the daily downtrend here, guys, looking for healthy weekly consolidation. It's been a weekly bull flag for the past 4 weeks at this point. Very healthy nominal sideways consolidation. Consolidation does continue, guys. Target this area right here. You have your 12 EMA and you have your previous all-time high area of resistance, which is now support. That is 36,800-ish down to about 36,400-ish. This whole zone right here should provide some good relief for the bulls, but this is notable to us, guys. So it remains to be seen. Can the bulls recapture this? Or will the bears set the daily downtrend here, which will move us into weekly consolidation, very healthy weekly consolidation. The monthly, guys, is still extremely healthy for Dow Jones. So all of your higher timeframes here are healthy. Just loss of a few timeframes here by your daily bulls here, notably on Dow Jones and notably on XLF. XLV still healthy, guys, but a lot of our index is starting to pull back. Really only QQQ and SPY holding up right now, but you can see a bit of red flags now in the indexes, right? This could lead us into further weekly consolidation across the board here, right? Dow Jones, weakness. IWM, loss of the daily uptrend. Daily downtrend is set. XLV still healthy. XLF, losing the daily uptrend, loss of the 12 EMA. QQQ still healthy. SPY still healthy. So very mixed market. There is still some rotation, but we've got to keep an eye on these short-term indicators here, guys, right? Now let's move on to your big tech names. So moving on to Apple here, guys. Apple, very red start to the day. You can see top to bottom from Friday, pretty much 2.76% to the downside. Recovered nicely intraday here, right? As your bulls try and fight back and try and reset this hourly uptrend to the upside, right? So if you get a break of today's high tomorrow, hourly uptrend will be resumed by the bulls and your daily bounce here will be continuing at this point. They're looking to avoid the continuation of your daily downtrend here. Flush of the lows, 180.22 would be continuation of your daily downtrend. Now, because of the size of the pullback on Apple, we were always looking for a lower high and then potentially lower low continuation. The size of the bounce was crucial. And I'll tell you guys, the size of this bounce was not high enough. We barely got up to the 50% mark. You want to see them get as high as 618 to give them the best chance of recapturing a daily uptrend. But because the size of the bounce was fairly weak, well, the favor is now in the camp of the bears for lower low continuation on Apple. If ever we just continue this lower low into our green box area, I'll remind you, my sweet spot for Apple remains between 180 and about 175 for a temporary buy area. The weekly chart, Apple has lost your weekly as well, trying to set weekly bottoms right here. But if we simply do continue into weekly consolidation, that would just be a furtherance of this monthly tightening range. So Apple still looking healthy on the higher timeframes here, but not looking that good on the shorter timeframes here, guys. Until we can really get a recapture here of the daily uptrend by the bulls, you can't say that your weekly bounce is started and look to the higher timeframes for Apple to really confirm this continuation here on the monthly timeframe. So short-term, long-term timeframes here look pretty good on Apple, but your short-term timeframes are weak, but could provide us for a short-term buying opportunity down into this lower area. I like Apple. Anything in the 170s is fairly good. Moving on to AMD here, guys. Outstanding performance by AMD today. Semiconductors really doing an outstanding job here today across the board. 8.31% to the upside. Slight little headline here. AMD shares jump 8% to highest close since 2021 on AI chip demand here. They had 2 upgrades over the course of the day here, right? So Tom O'Malley, an analyst at Barclays, raised his price target on the stock to $200. He said AMD could post $4 billion in AI chip sales this year, cited strong demand for the MI300, the company's highest end machine learning chip for servers. So once again, guys, this is playing into their competition with NVIDIA. The company's artificial intelligence chips will be in higher demand from companies such as Microsoft, Google, and OpenAI. So they're now competing with NVIDIA. They're the 2 only frontrunners in this competition here, guys, right? In late 2023, AMD announced new server chips for AI to compete with NVIDIA's H100 and A100 GPUs, which are used by OpenAI to train and serve its models, such as the one at the heart of ChatGPT. AMD and NVIDIA are the 2 major producers of GPUs. They're the only 2 people that have the power to actually compete in this data processing unit and this new data warehousing and data processing vertical, right? Sales vertical, right? So that's the reason for your AMD pop here today. 2 different analyst upgrades and very, very bullish, analyst expectations in terms of their competition with AMD. So AMD only, guys, now 3 point something percent from their all-time highs. What a rally since November. We're talking about a roughly 66% rally from the lows. I had reiterated so many times during this consolidation that AMD was looking absolutely amazing, was one of my favorite plays. So I hope you guys were able to scoop up some shares down there. Daily uptrend now to the bulls. So semiconductors looking beautiful here. After losing the daily uptrend with this low set right here, we were looking for the size of the bounce, 100% engulfing bounce. And then we were looking, as of last couple trading days, set the higher lows into daily uptrend shift, and that's exactly what we got today. A beautiful daily uptrend confirmed at this point. Weekly uptrend is looking absolutely gorgeous as well. 3rd leg up on the weekly, and monthly breakout is just absolutely beautiful. Monthly uptrend here right into your all-time highs. All-time highs, guys. Next area of resistance, 164. No red flags on AMD. As soon as this move is topped out, we're just looking for a daily higher low, anything above 143.41 for potential trend continuation. No red flags at all. AMD, insane guidance for 2024. Amazon pulling back 1% on the day here, but Amazon's still looking healthy, right? So after losing the daily uptrend here, daily downtrend, we were looking for the size of the bounce. We got a 100% engulfing bounce. Now the bulls are set up nicely, have created a ton of space off your lows right here to set a daily higher low to shift the trend to the bulls. So now any pullback here, anything above 144, looking for a daily higher low for further trend change. Moving averages are right here. And then you have this big area, which is now going to be acting as support, which starts pretty much at 148. So bulls have a lot of defense areas here coming up shortly, but looking good here, guys. Looking very good for potential trend continuation to the upside. Weekly is also looking fairly bullish too. Weekly uptrend confirmed. Weekly higher low is set last week. Nice, beautiful engulfing candle last week by the bulls. No red flags on Amazon in terms of the weekly. And even on the monthly here, guys, Amazon looking very good. Amazon's profitability over the course of the year is going to be front and central as they look to expand their EPS and profit margins over the course of the year. I do think Amazon is going to have a very good year. Maybe one. Amazon and Google, I'll tell you right now, guys, I do think they are going to be the 2 outperformers in tech this year. Obviously, AMD and NVIDIA can just run away with the show as they continue on their new sales vertical for data warehousing services, right? But in terms of your classical big tech plays between Apple, Amazon, Google, Meta, Microsoft, right? I do believe Amazon and Google are poised to have the best year out of all of them, as they did not benefit from the substantial rise of the likes of Microsoft, Meta, and Apple that had last year. Amazon and Google still not at your all-time highs, and those other stocks have recently eclipsed, or almost in the case of Meta, eclipsed their all-time highs. So Amazon and Google, fairly good bets for this year, in my opinion. Moving on to Google now. Right, Google looking very, very healthy as well. Daily uptrend never lost by the bulls, so we're just looking for daily higher low, anything above pretty much 136.87. Looking for a daily higher low for further trend continuation. Keep an eye on this here, guys. This whole previous area of resistance, right? We're talking 143 down to 141. This is your first line of defense right here, and then we pull back into the big area of support. So this whole area, 143 down to 138, guys, very decent area of support. You see it best on the weekly. It was such a struggle for bulls to pass this during the months of September all the way through December, right? And now that we're above it, the bulls should be able to use this as support on the weekly chart. Weekly chart is beautiful. Weekly uptrend confirmed here, guys. So any pullback here, guys, still looking for a weekly higher low, anything above 137 for trend continuation. So same thing, right? Daily uptrend confirmed, looking for a daily higher low. But if this daily consolidation does continue, we're also looking for a weekly higher low above that same mark, above pretty much your 137, right? No red flags on Google. Monthly breakout, well confirmed at this point, right? And Google does have earnings pretty much in 2 weeks. So going to be keeping a close eye on that. But as long as we maintain above this support level, guys, I do think Google is poised to make its next leg up here. And the next leg up should take us right into the all-time highs around 151. So Google looking very, very, very good currently at the current levels. Moving on to Meta. Meta pulling back ever so slightly on the day here, 1.88% to the downside here, but Meta was always in a beautiful daily uptrend, right? So any pullback, we were saying this as of last week's videos as well, any pullback now looking for a daily higher low, anything above 340.21, just for a technical higher low for potential trend continuation right here. Keep an eye on your 12 EMA, previous resistance right here, 359, right? Previous resistance is also the location of the 12 EMA, and Meta has been using this 12 EMA as good defense pretty much all year from 2023 to basically have a chance for the bulls to take a stab at setting the daily higher low right here for further trend continuation. No red flags as of yet, guys, just a very healthy pullback on Meta. Weekly chart is looking gorgeous as well, right? Weekly uptrend just continues at this point. Right, even if we do get 1-2 weeks of pullback with daily sideways consolidation right here on the weekly, just looking for weekly pullback here for a weekly higher low as well. Anything above 339.50, guys, just for a weekly higher low for further trend continuation. Meta well on its way here on the monthly as well. Next area of resistance, 384, 385 all-time high. So no red flags. Bulls control all time frames on Meta. Moving on to Microsoft. Give me a quick second. So Microsoft ending pretty much 0.5% to the upside. We're actually higher, set a new all-time high on Microsoft during the course of the day here today. Pulling back ever so slightly, but no red flags here, guys, right? So moving very, very nicely here. Daily uptrend is set at this point. Any pullback on Microsoft, when this move tops out here, guys, you're going to look for a loss of the hourly uptrend, right? So when the bulls lose the hourly uptrend, you are looking for daily consolidation. Daily consolidation, couple targets here, guys. Previous all-time highs, right, 383.86. This area of resistance should be now newfound support. And then if they pull back a bit further, you have your 12 EMA, and you have the top end of this range right here, about 377.39, just looking for a daily higher low, anything above 366.50, just for a daily higher low for further trend continuation, potentially on Microsoft. Microsoft, beautiful weekly breakout as well, right? Weekly bull flag, right? Tightening range right here. And now back to the weekly uptrend for Microsoft. So no red flags daily or weekly. And even on the monthly here, guys, you can see this as well, right? Monthly uptrend, simply continuation in beautiful form by Microsoft. So Microsoft and Meta here, guys, no red flags whatsoever. Moving on to Netflix. Netflix pulling down substantially here, guys, 2.22%. They do have earnings next Tuesday. So expecting price action to be fairly tight here leading up into Tuesday's earnings. And then Tuesday's earnings are going to be critical for guidance for the rest of the year for Netflix. But in terms of the technicals here, guys, right? We had a daily downtrend. The bulls engulfed the entire move, and now we're looking to set a daily higher low, anything above 462.27. Looking for the daily higher low for potential daily trend shift to the bulls here. But like I said, with earnings so close here, pretty much only 4 or 5 trading sessions left before Netflix's earnings, right? So not much time before earnings. I do think that earnings is going to be the break catalyst here for either your new 52-week highs here, or potentially setting the bears up for potential more further downswing here, which will bring into further weekly consolidation. And if ever earnings make us come down here, guys, right? If ever we get a drop 450 down to 425 is my sweet spot. Why? It's just going to be healthy monthly consolidation. Beautiful monthly uptrend by Netflix. Any consolidation is just looking for a monthly higher low for further trend continuation over the course of the year. Netflix is set up very beautifully here, guys, in terms of the technicals. And as of their most recent quarterly earnings, guys, no red flags in the business whatsoever either, right? Your subscriber growth is back to positive territory here. Very, very good. They're expanding on their ad tiers as well, and it's being well received. The password sharing crackdown has also been well received as they continue to increase subscriber count. And as a whole, guys, I mean, their shows, the return on the shows that they're making is very, very good. We're talking about their budget for a lot of the shows that they put out is between 20 and 50, $60 million. And the returns on those shows are always 2, 3, 4x. So they're doing very, very good. They're very profitable in their production segment as well. So all lines of business for Netflix right now are positive. So no red flags on the stock. And in terms of the technicals, also no red flags as of yet here, guys. The line in the sand, 462.78. For which reason the bulls lose this and the bears set the daily downtrend. Just looking for a weekly consolidation here, right? Line in the sand still remains that 462. Lose the weekly uptrend here potentially, and we're just due for healthy monthly consolidation on Netflix. So I will be a buyer of Netflix if we do dip into that territory. Now moving on to NVIDIA. NVIDIA, guys, just absolute monster of a stock, right? After breaking this all-time high, we've had so much continuation now. Break of the all-time high, we're almost 12-13% continuation on this. So no red flags on NVIDIA whatsoever, guys. Any pullback when this move tops out, when the bulls lose your hourly uptrend right here, you will be in daily consolidation. But at this point, the bulls have created so much space. Any pullback, just looking for a daily higher low, anything above 472.50, looking for a daily higher low, guys, for further trend continuation. No red flags whatsoever. Do 12 EMA, if we do pull back as of tomorrow, let's say, 12 EMA should be the first target here. If not, obviously, this drop right here would be a significant drop back to your all-time highs. So I don't know if that's actually possible for NVIDIA right now, unless the market really falls apart. That would be your next major area of support, and it would be taking back a lot of this move, right? 10% pullback towards your previous all-time highs. No indication that that's going to happen, though. On the weekly, everything is looking very healthy after this weekly tightening range. Weekly bull flag right here. Beautiful breakout here on the weekly as well. So even if we do get a daily downtrend potentially, right, just looking for a weekly higher low, anything above 475.85, healthy weekly higher low for trend continuation. No red flags. NVIDIA well on its way here to the monthly breakout as well. So NVIDIA looking absolutely gorgeous right now. Very tough for me to buy up here, though. Now moving on to our three last ones here. Tesla, right? So Tesla coming down here, guys, right? As I was saying here, guys, if we come down to the 210 area, you should have some very good premium on your 200s. Now, if you were able to get this early in this morning here, guys, I featured Tesla stock in terms of yesterday, in terms of the top 10 stocks I was looking at for premium farming this week. Tesla actually pulling down early in the morning, stayed down there for roughly the first half hour of trading, or rather about first 20 minutes, right? 212 all the way down to 214. You actually had $1 in premium at the $200 level puts. So hopefully some of you guys were able to get that. And now those puts are worth only about 20 cents. So you would have been able to make about 80+% at the high of the day here on those puts for a one-day trade in terms of short puts, right? So looking to buy the stock. So that's why the premium came out of them a lot. But Tesla's still struggling here, guys, still unable to capture the 1 hour time frame. If you can't capture the 1 hour time frame here, guys, right, you can't expect a daily bounce to be underway. So still looking for the recapture here of the hourly time frame. At least now we're above our moving averages. We came off oversold conditions now, and the bulls are looking to potentially put in a move. Even 4 hour is crushed in terms of oversold conditions as well. So if they do get the hourly trend change started, guys, well, you're looking for your daily bounce, and then your daily bounce, we have to measure the size of the bounce in relation to our most recent lower high, which is right here, 240. Need to see the bounce get as close as possible to 240 here to give ourselves the best chance at potentially regaining the daily uptrend, and that would mean we need to recapture the 618 level. This would be roughly the 230, 231 level to give the bulls the best chance at resetting a daily uptrend. But with earnings so close here, guys, next Wednesday as well, only about 5-6 trading sessions left before earnings, I don't think that we'll have a major break of either your downside $200 psychological level or a reset of the daily uptrend much before earnings here, guys. I am expecting fairly muted price action on Tesla, unless we get some more continued company-specific news in the form of news on Elon Musk or news in terms of the Red Sea developments here hindering their shipments and potentially delaying further the production out of Berlin, currently delayed for about 2 weeks. If they extend those delays, then obviously before earnings here, we're going to get a little bit of a downturn as well. But Tesla daily bears in full control at this point. And even on the weekly here, guys, right? Weekly pullback is well in motion. Bears now in control here. Weekly uptrend was lost. Now remains to be seen. Will the bears be able to set a weekly higher low, a weekly lower high, and send us into a weekly downtrend? But really, Tesla's just been trapped, right? Tesla's just been trapped. You can see it clear as day in kind of this downtrending channel right now. So leads us to believe that potentially we may get, if earnings are bad here, guys, the only way we can save this here, guys, is with good earnings. If we do get bad earnings, guys, expect us to start retesting your 200 psychological level and even all the way down to about 190 in terms of the down, the downwards part of this downtrending channel. That would be very worst case scenario here. So earnings are going to be absolutely crucial, but you guys know Tesla, for me, anything below 200 becomes a buy in terms of for their expectations over the next 6 to 12 months for Tesla. Now, moving on to Palantir, guys. Palantir trying to put in work here, guys, right? So after the bears controlling this daily downtrend for so long, we got a decently sized bounce. Now we're just looking for a higher low, potentially for the bulls to be able to recapture this, right? So your bounce conditions were underway, were met, recaptured around 618% of the move here, which is this line right here at around 1705. So the bulls did put in enough space to give themselves a chance at setting a daily higher low and daily uptrend reversal here, but need to recapture this 12 EMA right now. So daily uptrend would be set, guys. If we break 1705 currently, the bulls would have the daily uptrend set and we would have a weekly bounce underway. Then we're going to be looking how high in relation to 1850 can the bulls get to potentially reset, have a good chance of resetting your weekly uptrend as well, because we are currently in a weekly downtrend right now, right? So expectations just looking for a weekly lower high and then potentially for a retest of your lows right here. So we'll see how high, once we get a daily uptrend here, how high will it get in relation to, as I said, your previous weekly higher lows, lower highs right here, 1859. So Palantir in a crucial area right now. And obviously, if the bears just roll this over, well, we're looking at larger form support here down. We're down here, guys, 1550 all the way down to $14. Big area of consolidation previously in 2023, and is your lower area of your monthly tightening consolidation range as well here. So we're going to be looking for that to play out on Palantir. So Palantir still looking somewhat decent for potential bulls capacity to reset a daily uptrend. But if ever we lose this here, guys, just looking into buy territory, that's when I'm going to be looking to average into some Palantir shares. 1550 down to 14 is the price target for me. Now moving to PayPal. PayPal, interest rate sensitive stock, right? So PayPal had a very bad day here today, right? 4.18% to the downside, really leading all the stocks that I cover here to the downside. Very negative day, no company specific news, just really interest rates, guys. So after putting in such a beautiful sized bounce, we were looking for a daily higher low and daily uptrend shift, but that has now fallen apart on the count of the bears engulfing move here on the course of the day here, right? So now at this point, guys, looking to protect this line in the sand level, right? 5760, 5750 is going to be the line in the sand level to protect. If we lose this, well, unfortunately, daily downtrend is set by the bears. And as usual, guys, PayPal would be losing your weekly move as well here, right? So we had a nice little weekly uptrend here going. As of the most recent 2 months, they set the weekly higher low, and we were looking for further weekly trend continuation. But if you take out this 5750 level, guys, we now potentially set another weekly downtrend here, and that would just be further monthly consolidation from PayPal. So PayPal, I've said it once, and I'll say it again here, guys. We're going to need bullish earnings for PayPal. PayPal with earnings in the next 2 weeks as well here. We're going to need cycles of bullish earnings back to back here and back to pretty much standardized growth and continued cost reduction for investors to reignite their bullishness in PayPal. PayPal valuation is very, very, very cheap right now, as a matter of fact, but we need to start putting back-to-back quarters of really positive guidance and continued revenue growth. And obviously interest rates, when interest rates do start coming down, it's going to help PayPal stock a lot. But just for now, PayPal continues to remain a buy. $60 all the way down to $50 is a very juicy opportunity for PayPal. But like I said, guys, this story is a story of recovery. It's going to take an amount of time still for this stock to turn around in a significant fashion here, guys. We're going to need company-specific news, very bullish news, and we're also going to need some macro to really push the wins in our sales as well. So keep a very close eye on that for PayPal. A bit disappointing here. We were so close to being able to get out of this downtrending channel, but unfortunately with your rate speculation, the interest rates coming back up now on the yields, just really crushing PayPal stock to the downside. So just a continued opportunity, guys, to continue to DCA into some long-term shares if you are bullish on the company. I am long-term bullish on the company here, but like I said, guys, the recovery story may continue to take some time. So that's pretty much everything that I had for you guys today. Hope you guys enjoyed the video. As usual, if you did, consider dropping a like. Would really appreciate it on the video. Helps me out for the channel growth. And if you're new to the channel, consider subscribing as well. We'd love to have you here. Over 600 of you have subscribed, and I thank every single one of you for it. Really love doing these videos. And as always, guys, if you have any questions whatsoever, leave them down below in the comments and it will be my pleasure to answer you. I'll do a portfolio update tomorrow because tomorrow we don't have as much earnings to cover here on the channel. I want to keep these videos, try to keep these videos shorter than longer. So take care, guys. I'll see you guys tomorrow after the close, and peace.